Welcome back. The UAE financial markets are closed today. Trading will resume on Sunday. So now let's take a look at the currencies, followed by the price of oil and a selection of commodities. Looking over to America, the fear frenzy that gripped oil markets earlier in the week seemed to have further eased on Friday. Oil traders at the New York Mercantile Exchange had less to fear after a senior oil industry official said Saudi Arabia, the world's top oil exporter, was already boosting output to offset any oil shortages out of Libya. The S&P 500 lost 1.7% for the week, breaking a 3-week streak of gains. Friday's bounce followed a late recovery Thursday that showed buyers were ready to support shares after a bout of selling. Crude oil closed up above $97, completing a more than $11 jump for the week. The Dow and the Nasdaq each lost roughly 2%. The mood of the US consumer is brightest it's been in 3 years. Sentiment has improved, especially among Americans earning more than $75,000, helped by the belief the labour market is picking up. The Thomson Reuters University of Michigan final reading for February was stronger than expected, but may not reflect the impact of higher energy costs due to civil unrest in the region. Additionally, there are concerns that customers may pull back as gasoline prices rise, and with higher cotton costs expected to push up price tags. Boeing has won a $30 billion contract for 179 new US Air Force refueling planes, trumping arch-rivals Airbus. The 767 passenger jet will form the base of Boeing's tanker. Airbus parent company EADS had pitched its A330 to fulfill the role. Although the planes look similar, the US government said Boeing offered a far better deal at a time when defense budgets are being squeezed. Boeing's plane will be constructed in Washington, where workers understandably welcome the decision.
Today, based on all evaluated criteria, price, and the results of a well-documented process, we announced that the Air Force has selected the KCX proposal provided by the Boeing company.
Britain's Lloyd returned to profit last year for the first time since the financial crisis. The bank, which is part owned by the British taxpayer, made a pre-tax profit of £2.2 billion in 2010. That's compared with the £6.3 billion loss it made in 2009. But the outlook isn't all positive at Europe's fifth biggest bank. It's the latest lender to be hit by exposure to Ireland, which costed over £4 billion in bad debts. And it doesn't see margins improving this year. Investors and analysts say the results show it will be some time before Lloyd's fully recovers and starts growing again. And after the break, we take a look at the day's sports news, so stay with us.